Sunday morning, weekly market recap. A little bit on the rush this morning. I got a few things to do, so I'm going to be busy in the afternoon. So the goal for this one would be keeping it under the 1 hour mark, which, for me is already hard to do. So let's just uh, jump into it right away. Let's look at the economic calendar. It looked like this week was the week of central banks. You got the Australian central bank, the RBA, keeping rates where they are, so they didn't move them, which is a little bit of an outlier. They are not really moving or dropping rates. They are still higher for longer. Although, the maximum they achieved was to the upside 4.30%, something like it. So maybe they can stay at that level for a bit longer, right? Then we got, well, services PMI in the US. They came in better than expected, as you can see. And then we got, of course, the Bank of England, and they dropped rates once again, just 25 basis points. It looked like, yeah, it looks like 25. And of course, then you got unemployment claims, um, cooling down a bit, so that should be kind of cool for the labor market in the US. And then the Fed with another 25 basis points cut, which was, of course, largely anticipated. I watched a little bit of Jerome Powell's press conference. It was it was the same as usual. Again, I've been very harsh on the man over the last year and something, but I gotta give him credit that it was a very good communicator, right? I mean, it was always very careful to not spook the market too much. He was always trying to prepare the markets for what was coming out, the FOMC. I mean, uh, again, it's not an easy task what he's charged with, right? He got a very delicate office to keep on. So I guess at the end of it, it's not making a bad job. The U.S. economy, it's probably the only one in the Western civilization to not being in a declared recession. Because if you look at Europe, like Germany, England, maybe France, Spain, you could say they're very, very far ahead in that don't want to, not necessarily recessionary still, but slowing down, right? They're slowing down much faster than the US, right? So I mean, at the end of it, good for you, Powell. Well done so far. And then we got the preliminary University of Michigan consumer sentiment, which ticked up again. So overall, it looks like we are seeing, at least be very careful, this week or this recent period, right? We are seeing a little bit of some sort of a reflationary, rebounding type of behavior, both in the economic data and in markets as for price action. And we're going to get into equities, indices, and whatnot in a bit. Uh, so, am I missing something? It appears to me there was something particularly relevant this week. Can't remember why or what. Mm, oh yeah, right. The elections, right? How could you forget? So again, yeah, we got the presidential elections in the US, and of course the markets moved on the result. The same way they were moving getting into the elections, now they moved on the results of the election. And it was, as you may have already seen, a very sharp move. So let's start out with currencies as usual. Now, if you remember, we were looking at the DXY mainly, and the premise was up until the point it can hold the EQ of the overall macro range, which again is this one right here. Now, many different people will have many different ways of identifying these ranges. So for me, this was good, and uh, gotta say, it's been proven kind of right for all this time. So I'm still operating off of it, and we literally bounced off of that EQ and push higher. Then, of course, we got a little bit of a pullback, and then price got stable. Same for the euro. If you remember, we were saying maybe a little bit more of upside, but considering our stance on the DXY, expect it to be just a normal drawback. And again, the trend in this segment, it's kind of set up. So don't really hope for the euro to break out relatively quickly from these highs. It's very unlikely at the current moment in time. And the pound is doing the same. It got a little bit of upside, and then it was crashed down back again. Uh, Same for the yen, of course. So we got a little bit of a dollar strength, which it's not a new thing. We have been having it since basically the beginning of October. Now a lot of people are reading many different things into it, right? Um, to me, one of the most valuable theses could be, well, we were kinda betting on Trump to be re-elected, and probably the market was thinking, "Yeah, this is good for the American economy, so therefore, if the American economy is performing better than all the others, that should bring in flows into the dollar, and the dollar, by extension, should be appreciating against his peers, right?" Yeah, I mean, I would buy into that narrative, but to me, the overall premise, it's not really what you think the economy might do in the short term. This is a long-term process, as I highlighted last week, right? It's not like the DXY, it's coming up from, yesterday, last week, last month. It's been relatively strong over the last 2, 3 years. So um, I still think there are fundamentals reasons behind that, which are just bigger than what happened in the recent days, right? And just as an aside, as usual, to remind you that you shouldn't discard the dollar when it comes down to its role as a global reserve currency, no matter all the discussions, all the theses against it, all the narratives, because it looks like once again the dollar utilization actually ticked up in recent times. And of course, the renminbi or the yuan, the Chinese currency, ticked up. And it looks like the real loser was the euro. So again, always be careful with these themes about de-dollarization, the BRICS, the world rejecting U.S. treasuries, the world starting to divorce from the dollar, stop using the SWIFT and whatnot. I mean, it sounds good and it sounds logic, but all in all, if you look at the data, you're looking at a different reality as for now. It doesn't mean it can change into the future, but that's what you got to deal with at the current moment in time. Let's have a look at gold. And again, gold was looking a little bit weak last week, and it got this massive drop, but support for now held. So we are still far from that threshold I was identifying at then around 2,600, more or less. So the initial bounce was good, didn't have any real continuation to the upside, but it is also true that it came, the drop came on Wednesday, the bounce came on Thursday, and then you got Friday. So, and the week closed. So we will need to keep on monitoring in the coming weeks. We are still in that scenario where you still have the doors open for pretty much everything, right? Because if you remember last week, we can still look at it starting to range in between these two levels, basically unfolding that trapped fractal compared to the upper fractal right here, the bearish fractal, and the bullish fractal right here. So it could stay in this range for a while. It could try to regain the previous range, the previous structure, the previous fractal, and keep on going higher, or it could start to break down, right? Let's say you got failure at reclaiming this level and you see it starting to bleed lower. At that point, you might start to worry about lower prices on gold. Fundamentally, again, many different arguments, many different reasons and narratives for gold going up so much, and maybe the run is over, maybe it's not. Some people are talking about inflation, some people are talking about the 10-year treasury yields, which are basically kind of tied up together, right? Inflation and the yields. Some others are still talking about central banks stockpiling on gold because they don't trust the dollar and they don't trust the US. I mean, at the end of it, what's funny to me is that all these narratives, all these logics, they are all right. you know, that's a funny thing about it. No matter what reason you find, up until the point price is going up, you're right. By definition, you're right because price is going up. So you can have reason A, B, C, D, and if they all support the thesis of price going high, you're right. But that doesn't consider the fact that maybe you are picking up the wrong reason or the wrong logic. But still, that is validated by the fact that price is going higher. So again, it's a little bit of a strange dilemma, right? For me personally, I just more often than not, I look at these things and then I say, okay, beyond that, what price is doing, how the structure is defined, what's the trend, right? There is a key level which has been broken. There is a key swing which has been violated, and all that stuff. Oftentimes, in my personal experience, 90% of the times, price is always a much better indicator than all the other narratives and logics you might find around on the internet, on blogs, on YouTube channels, and whatnot. Sure, I mean, at the end of it, I'm not saying you shouldn't look at them and trying to wrap your head around them if you want to know more or if you really want to understand the underpinnings and the fundamentals of the market. But when it comes down to risk management, the ultimate arbiter is the price. So why not just look at price, right? Then what we got, oil. Oil it's a little bit volatile this week, wasn't it? Overall, at the end of it, it closed down the week basically $1 above where it closed down the previous week. So I guess if we zoom out on a weekly time frame, here we got some sort of a doji, right? Um, I don't know. Like from a price action standpoint, I would say this is more neutral than anything else. From a fundamental standpoint, I would still lean toward uh, slightly lower prices into the future for oil. Um, so it might be that it's just one of those periods where it stays range bound in a huge and large range for a period of time, like we've seen in here, right? For instance, I mean, it moved a lot. It was very volatile, but overall, didn't really go anywhere. It stayed in between that 78, 68 range, and then that $10 range for quite a bit of time before moving definitely higher or lower, right? So sometimes you just don't have a specific bias, and it's fine. I mean, you don't have a bias constantly on the market. It's the same as saying you don't need to be in a position every single time, every single moment in time, right? It's fine not having a bias, not having a clear idea, not having a defined idea on what's to come for the specific market. It's all good. I mean, it can happen. Markets can stay in a range for a little while. So, you know, it's all good. And to me personally right now, beside keep on thinking that from a fundamental standpoint, you should see lower prices into the future. Other than that, if I just look at price action from a technical standpoint, I'm not seeing something particularly defined at the current moment in time. Yeah, that's it. I know it's not a lot. I know it might not be satisfying having a little bit of an analysis like that, but what can you do? That's what I got, right? So let's have a look at Bitcoin and massive, massive reaction on Bitcoin. Oh, if you remember, there was that level right here. It was held, and after the you know election results, it just skyrocketed to the upside. Um, I mean, the path was already set up, right? But I mean, you can't deny this was a hell of a move to the upside. So again, Bitcoin seems to be really, really bullish. You know, it keeps on being bullish. It was already bullish. Even throughout all this week, where we got that drawback after this impulsive move to the upside, it was still on the bullish side of things, right? And I know people were already talking about uh, swing failure here, swing failure there, because I've been pointing out that if you look at the CME future chart, which I got right here, actually last week move just by a smidgen here, just a tiny bit, but it took out the previous all-time highs. So it could resemble and it could met the criteria for a swing failure pattern. But again, as I said, all-time highs for me are very delicate, and I don't treat them lightly. I rather go with the trend in these cases, right? So regardless what the futures did, I still thought that if we could hold this support, everything was good, and it was just normal seeing a little bit about the risk getting into elections and after a sharp move like this. Support hold, and what happens after you got an uptrend and support actually holds. That's what comes next, right? Let's have a look at yields. I'm having a very, very sleepy tongue this morning, I can tell. Maybe it's also because I'm smoking in the process of talking. But anyway, yields had this impulsive run up. I guess that was election day. No, the day after the election. Well, in between the day of the elections and the days immediately after. And then it looks like the move was kind of faded, but it's a bit it's a bit more pronounced on the long end of the curve compared to the short end. Um, this is another one of those fields where there is a lot of discussion right here, right now about fundamentals. Trump victory, should it be inflationary? Therefore, yields are set to go higher. Um, it would be a very long topic to get in. I keep on maintaining my. I'm I'm still holding my ground, right? I see lower prices into the future. I see disinflation, and therefore I see yields coming back lower. Uh, based on historical data. Now, could this be that one time where this time is different? Absolutely. Anything can happen. We do know that, right? I'm just saying, to me, the probabilities are still for disinflation, lower yields, and a little bit of a rebound in treasuries price. You know the gist of it. I've been particularly vocal on it. So, yeah, I guess we might see what happens, but I would still lean to a little bit of a drawback after these moves. It is, you know what? It is kind of what we've seen with the treasuries when we were going into the first rate cut, right? They were massively rising to the upside ahead of the first cut, which was again vastly anticipated. And then what you got, it was a sell the news event, right? So this move right here, oh, usually when I see these moves and then I see a quick fade, now I do know there are many different fundamentals reasons in yields, but if I just look at the price action, for me, if this was, let's say, the Nasdaq, right, intraday, I would start to think about a top to be put in. Maybe not right here, right now, but that for me would be the beginning of a topping process. Again, if you look at the other durations, they are a little bit different. So never say never, but I'm just keep on observing them and see what they keep on delivering as for price action and how they might unfold in the future. So again, I just take them step by step, week by week. Yeah, I do check them regularly throughout the days. Normally I check them once, maybe two times a day, but I'm not seeing anything which should imply further and severe downside. Actually, I think next week is going to be interesting. Next week, or at least the month of November. Um, like for the TLT specifically, I just want to say if we can reclaim this level right here, that would be all I need to start thinking of. You know what? Maybe that was a little bit of a long-term process of putting in a low, right? But again, don't have a green light for it up until the point we get back above this region and we break this flow. This is want to call it flow, or want to call it a trend line, whatever you. Still, it is just structure at the end of it, right? And reclaiming a previous structure. So again, that would be the green light to, at least for me, to really starting to think, well, you know what, this might be it. We put in a low, and now we might keep on rallying, and that would be in alignment with my fundamental type of uh, thought for yields long term, mid to long term, right? And of course, if we look at the indices, there's no need to say they massively pumped, right? Especially the small caps. If you look at the Russell, and even if you look at the Dow, right? That doesn't mean that the other two did poorly, right? I mean, ES made new all-time highs, and it looks like finally even the Nasdaq joined the new all-time high bandwagon. So they're bullish overall, or all across the board. We're seeing bullishness. So again, don't fight the tape. We got that. One thing, we got that pullback, right? And I said I was expecting maybe another spike to the downside before the elections. We didn't get that. So again, overall, we got the risking process going into the elections, but actually, the week of the elections, we didn't have that spike to the downside, which is a bit strange, right? I mean, it's not strange. Let's just say I wasn't expecting it, right? That's a better way of putting it. Because I was expecting a little bit of a liquidity grab or a little bit of a pull back into a liquidity pocket, a little bit of a peak up, which we didn't have. So, I mean, it doesn't always work out like you expected, right? That's the beauty of markets. Sometimes for the good, sometimes for the bad, but that's it. What you're gonna do. If we look at ETFs actually were textbook move. We broke the 21 moving average. We came back down to the 55, and we just bounced off of it, and we went for new highs. I guess. Let me see. Do we go? No, actually, if you look at some basic indicators, that there wasn't a divergence in here, but there was a cross on the stochastic, which obviously it comes where it comes in where when we are already breaking all-time highs, so not that much of a signal, if you ask me. But again, this is not my bread and butter. I'm not a huge indicator guy, so I just sometimes look at them as a reference. So what counts is that the market right now is moving, in my opinion, and here where we start stopping uh, talking about pure technical analysis, and we get into the what, right? Because we are humans at the end of it, and we always need some sort of a uh, verification, right? We need to go there and say, hey, yeah, well, that's the move right there. But why did we got the move? We need to go in retrospect and investigate what caused the move. All right. We always need a reason. We always need a logic, a justification for what we have seen happening. And this is normal, right? Um, Up until the point you you don't start to twist the old process, like um, it's like the old saying going, right, show me the charts and I'll tell you the news, because sometimes people tend to attribute to the news or to the narratives much more value and weight than what they really deserve. So it is a human process, I guess. And sometimes it can also be a very funny type of a mental exercise. But I would just say don't trade based on them. don't don't take those premises. Don't take those justifications and put on trades based on them because oftentimes it's gonna harm you. All right. So just to put it out there. Now, before I go, let's have a look for a few minutes. Let's say, well, where are we right now? 25. Right. So let's take a few minutes, maybe 15, maybe 20, I don't know. But I wanted to talk about, of course, what happened with the elections. Now, I'm not gonna stay here talking an hour and plus because there would be so many things to say about it, right? And everyone will have his own opinion. Look, I'm not here to debate politics, right? So I don't care who you voted, who you didn't vote for. It's none of my business. Whoever you voted for, it's up to you. It's all fine. I'm for freedom, and you are entitled on your own opinions and to vote whatever the fuck you want. I'm not even American, so I didn't vote any of the two candidates, of course. I was just an external observer, of course. So I'm not even gonna say I'm happy that guy won or I'm sad that woman lost. Nah, why should I, right? Um, I think as an external observer, I I kind of understand the result, right? But it's not up to me to say if it is a good thing or a bad thing, right? So again, what I wanted to do was actually looking at it not from the political view because I don't want to get into all the debates about what freedom of speech, abortion, guns, the border, right? Is it fair? Is it not fair? Um, we looking at conservatives versus liberals. No, I don't care of any of it. I mean, I clearly have an opinion of it, right? And I have shared that many, many times with my friends, with my family, and whatnot. I just think going public on the internet, trying to debate other people around the globe, which are basically strangers to me, it doesn't make any fucking sense. And it's a waste of time. All right. So let's just have a look at what we got in a bit more economic terms, so to speak. So pardon the imperfection of the screenshot. I just set it up on TradingView, and as you can see, there's also my cursor right here in the screenshot because I'm not content creator. Now, if you read through it, allow me a little bit of a leeway because, as you well know, I'm not a native English speaker, and I didn't even go to Oxford University in order to learn English. I actually learned it on the internet and mainly on video games because when I was younger, many video games were just in English and I wanted to play them, but I didn't understand the language. So, the needs create the skill, human ingenuity, right? What a precious thing. So there might be some typos here and there. It's all good. I guess the sense of it, I guess you can get the gist of it if there are typos anyway. But let's just look at what the intended policies might be for these Trump presidency and how you could, let's say, pair them up with what the market could do in the coming weeks or months. All right. So, as for my understanding, these were the key points of his program. So, keeping the taxes where they are, because he's talking about extending those tax cut to 21%, I guess, for corporation. And he was also talking about lower the tax, how do you call it, percentage? Well, anyway, the overall taxation from 21% down to 15%. All right. So that was one. Then what we got was an attempt to reduce government spending. And we do know about potentially Elon Musk being appointed as what uh, responsible for government efficiencies, something like it. So again, that would be another one. He want to pay down the debt, so he would like to decrease the amount of debt the US has, because of course that's a very important problem. Not only for the US, of course, but it is a problem, the debt, right? Reducing that trade deficit. All right. And then, you got the tariffs, which have been particularly all over the place. There is no way you didn't open up a browser and you didn't read about tariffs, right? And then, of course, you got the immigration issue. But as you can read in here, I'm not tackling it from the standpoint of, is it right? Is it not right for society? Is it good? Should we do it? Should we not do it? It is it uh, morally right to deport these people back to their countries if they are illegal? I'm not tackling it from that point of view, as you can see, right? I'm more interested in the economic side of it, all right? And of course, the deregulations, because we do know that usually deregulations are good for businesses, for companies, and therefore for markets, right? So, as you can notice, I added a particularly long note right below it so that these are just a recap of my overall thoughts. So, using these as a premise, you might say, right, as you can read, it is fine that you want to lower the taxes or at least preventing them to get back to higher levels they were before. But, you know, overall, I see many different pieces of the puzzle in here, and it looks to me like it's very difficult to match one with the other. Because, just as an example, if you lower the taxes, therefore the government will have less revenues. So you might say, okay, but we're going to take that difference from the tariffs, right? And therefore we're going to have the population with much more spending capability, and at the same time we are gonna even that out with much more income for the government from tariffs. But assuming that is a success as a policy, shouldn't it be inflationary? Because you got people with more purchasing power. And at the same time, if you implement tariffs, what happens should be that what you import should be a bit more expensive, because you can't expect the other side of the transaction will not increase prices to even out your tariffs, right? So who's going to pay for the tariffs, right? And so I was just, hmm, can it work for real? I mean, how successful could it be? What are the odds of these being successful, right? Also, because one of the other claims from elected President Trump was to lower inflation. But if you implement something like these with potential implications like these, uh, does it reduce inflation? At least in the short term, right? I don't know, right? Again, I'm not coming at these with like I got the all the answers and I am Nostradamus, right? I'm just trying to think out loud, and I think everyone which is operating in markets, whether it's for the short term or the long term or the medium term, should actually ask themselves these questions, because that's what eventually will move markets. These are I have quote unquote the arrogance to assume that the same way I'm asking these questions, the rest of the market is asking these and maybe a little bit more than these and maybe different ones, but we are all asking questions because based on them and the answers we get to, we we might need to adjust our behavior and our positions and our expectations in markets, right? So reduce government spending. Okay, you might want to reduce government spending, but you need to take into consideration that, especially over the last period of time, Government spending was also one of the main reasons why the labor market stayed afloat, because you got a lot of new jobs created by the public sector with public money, therefore public spending, the government spending. If you start to cut those heads, shouldn't you think that unemployment should go up? And if unemployment go up, how can you have aggregate demand going up? Now, again, you might say, okay, that's just a way to counter the potential inflationary trigger that you might have from the upper measure, measurement policy, whatever you. Yeah, that is true, but if you think less government jobs, more unemployment, less aggregate demand, okay, maybe lower inflation, but at the same time, less aggregate demand, lower revenues for corporations, and overall, if everything slows down, more income, sorry, less income for the government as for tax revenues. And you assume you're going to replace them with tariffs, but if demand is going down, you're going to import less because there is less demand, even on the internal, the domestic side. There is less demand from goods from the outside. So less good imported, less tariffs, less tax revenues, which add up to the less tax revenues you got from internal consumption. So how how does it work? I, well, I mean, I don't know. Paying down the debt. All right. How? How? You might say, yeah, by reducing government spending. All right. Um, I thought instead you would aim to outgrow the debt, right? So, that could be achieved in many different ways, right? First of all, and I get that, you could say, you know what, instead of spending billions in shit, we could start spending billions in actual productive investments. Therefore, they're going to pay for themselves in time, and we're going to be able to have a productive debt, which overall boosts up our bottom line when it comes down to economic output, and we might grow at a faster pace than the debt we issued to finance that growth. It works in theory. It is just that if you look at recent history, it never worked. So I don't know. One very interesting idea, and I didn't know about it. Shout out to my friend Anthony for it. He talked to me about this potential bill, which is probably has being discussed right here, right now, as we speak, about dumping a lot of US holdings of gold to then buy Bitcoin with it, and then using those Bitcoins specifically to pay down federal government obligations. I had to think about it for a minute or two, but conceptually is a very elegant solution, right? On the premise that Bitcoin price against, priced in US dollar, so Bitcoin against the US dollar will keep on going higher. Because at that point, if you say that you're gonna purchase with, let's put it this way, you print new dollars. With those new dollars, you buy Bitcoin, and therefore Bitcoin goes up in price. But then you say that Bitcoin, which is now going up in price, it's going to be used to pay down the debt that you contracted. So the only, I guess, problem, so to speak, would be you would need to see Bitcoin being appreciated against the US dollar faster than how much you issue new debt. Because at that point, in the future, you're going to have a much valuable Bitcoin in USD terms to pay down the debt that you may have issued like 3, 4, 6 months ago, 3 years ago, 10 years ago. In a nutshell, that would be a way to completely or partially, it remains to be seen, but to recollateralize the treasury market. And again, conceptually, I do agree with it. I think it would be an elegant solution if they can implement it. I I'm still missing a little bit of the dynamic of the plumbing in it, but conceptually, I can say that, that would be fucking great. I mean, it would be so smart the way you see it. It's kind of like what Sailor is doing with his bonds, MicroStrategy, the bonds, the Bitcoin holdings and whatnot. So I'm really interested to see how these unfold itself, right? Then again, the reducing the trade deficit, which is another one which left me a little bit, are we sure how? Because even before the elections, throughout the campaign, I was listening to the VP, JD Vance, talking about reducing the trade deficit. How would you do that? He said, well, we could just weaken the dollar. If we weaken the dollar, we might boost our exports because now the dollar is losing value against other fiat peers, and therefore it's going to be much more convenient from foreigners to buy stuff in the US because they are gaining purchasing power against the US dollar. All right. But at the same time, I was like, okay, but that doesn't take into account the fact that it is true that the debt is a problem for the US. Like you got what, 35, 36 trillion dollars in public debt. But then if you go around and if you look at the foreigners, if you look at the euro dollar system, there are like what, 200, I guess it was 200 something, 200 trillions. And mind you, the US is 35, 36 versus 200 trillions in US denominated dollars outside the US, which was issued outside the US in the euro dollar system. If you try to turn the trade balance upside down, that just means that you're going to have less dollars flowing out from the US into the rest of the world, and the rest of the world will be starved from dollars. What happens when that dollar denominated debt issued and present and outstanding in the rest of the world comes due? If they don't have any more the outflows of dollars from the US to pay that down or rolling it over, and mind you that the US can actually print the dollars, the rest of the world can't. So when times come and they need to pay down that obligation, which is a dollar denominated obligation, and if they don't have the flows from global trades, the dollars flow from global trades coming in, they're going to need to acquire those dollars. They need to pay down the obligations on the open market. But that means that they're going to sell their local currency to acquire the dollars. That creates demand for the dollar relative to other fiat, which is pushing the DXY higher, not lower. So again, even in here, I don't know. I mean, could this work? Like it looks like I'm finding an issue in every single proposal, right? I'm I'm not necessarily saying everything is shit and everything should be just burned to the ground because it doesn't make any fucking sense. I'm just trying to wrap my head around it and find and figure out how it is supposed to work and how you could match all the pieces of the puzzle together. Like tariffs, for instance. Tariffs, all right, it's good to say it. It sounds very protectionist. It goes in line with the MAGA movement. I get it. Our people first, our businesses first, our corporations first, our workers first. It's all good. You're free to do whatever you want with your local policy, right? But when we talk about tariffs, how much? About what's going to be the percentage? They say 10% to basically everyone and 60% on China. All right. But who pays for tariffs? Again, I hinted at that in the beginning. If you impose tariffs on me, I'm going to raise my prices. Now you might say that's the deal. You raise your prices, right? So therefore, at this point, American businesses and consumers won't find you convenient anymore. As you know, let's just say they won't have an incentive to buy from you, foreigner, because now your prices are too high for them, and they're gonna buy in the domestic market. All right. It might work for some specific goods, but I guess overall, for the large scale consumption, at least to me, it doesn't look like that the US has the industrial base to supply an economy which is 80, 70, 80% consumption. You don't have it. And if you don't have it, what's going to happen? You're going to create a supply demand imbalance. Or maybe even worse, you're going to create monopolies. Think about local businesses and corporations in the US. As for now, they have to face the competition from all over the world, like mainly China, right? And the answer was, well, we know what we are just outsourcing because we take we take down two birds with one stone, right? But for those businesses already producing stuff in the US and competing on the global stage with other businesses all around the globe, what happens is if all of a sudden you've been told, you know what, you got no competition. Really, I got no competition, so I can charge whatever the fuck I want for these goods, and they're gonna pay that because no matter how much I increase my price, the price that they might get from the outside of the country is gonna be always higher than that. Oh, fantastic! Isn't it inflationary? Plus, you might add to it, if I know I don't have any competition, why should I bother keep on improving my products? Why should I keep on innovating? You're forced to buy them anyway from price dynamic. So that I mean, the risk of you know leading to higher prices and worse quality, it's there in my view. So I mean, I this is one another thing that I didn't really find. Uh, how could you say that? I didn't find as easy as you might think to put into practice, right? And then you got the immigration issue. Now, again, regardless what you think about solidarity, inclusion, I don't care, right? I'm just saying you need to take into account that a lot of these immigrants they are providing low cost work. They are filling in those lower income positions in the labor market. So if you take them out of the labor market, what's going to come is, yeah, on one side, quote unquote, American people, citizens, they're going to have access to more jobs. That's for sure, right? But one of the two is true. Either they're going to take on jobs they didn't want before, because otherwise there wouldn't have, there wouldn't have been an immigration process if there was no jobs because Americans were willing to take those low income jobs. You wouldn't have needed immigration to fill in these positions in the first place, right? So they're gonna have to accept lower income conditions. Given all the above, right? You might get a job, but if you don't keep up with potential inflation from all these different policies implemented, you're still going to be poorer over time. And that's not a good base for a wealthy and growing economy over time. All right. That might be one. All right. The other one might be okay, the immigrants are now gone. So these positions are now free for US citizens. But when they come in, of course, they demand a higher income. So that should push higher the cost of labor for corporations and businesses. So that's gonna don't want to say kill, but that's gonna hit their bottom line when it comes down to profit margins. If they got less profit margins, one of the main impacts could be on the stock prices and evaluation, because now you got more costs, so that for all else being equal, less net revenues or net income for the company. Therefore, the stock need to be readjusted lower for the PE ratio type of thing, right? It's not good. Same as it wouldn't be good if at a point corporations could start to think, you know, I'm forced to hire these people, but they demand such a higher type of wage and salary. You know what? That doesn't make any sense for me. Here's what I'm gonna do. I'm gonna cut down production. I'm gonna cut down the amount of hiring, or maybe I'm going to fire someone to cut the costs of a labor, and I'm gonna decrease production to keep the supply of what I'm trying to sell in the market a bit subdued, right? A bit contracted to just to maintain the price stable, right? But that leads to less jobs. Less jobs, less aggregate demand. Is it good? Like I don't know. Let's just say there might be some frictions here and there, right? Plus, don't remember, I said taxes. Why? Because no matter what, even if you are an illegal immigrant, right? If you're not registered, right? You still pay taxes. Maybe, of course, you don't declare, you don't file your tax declaration, right? But you pay taxes indirectly because you still consume, you still buy stuff, you still generate revenues for other businesses. And those businesses having a much larger inflows of money are going to pay higher taxes. So it's an indirect process, but having those immigrants removed would ultimately also hit the bottom line of the government when it comes down to tax revenues. So again, this is not me saying that Trump policies will fail all across the board. I'm just trying to say you need to be very careful and you need to make a very clean distinction between what have been promised and what could be actually be delivered in practical terms. And as I recapped before, right? You know, these are all measures which have a very good appeal on voters, especially in this era of populism and whatnot. And by the way, I said I don't want to get political, but in my personal view, they are all populist. Both Trump and Kamala, they are both populist. The way I see it, all right. You might agree or disagree, but I do think that they are both populist, and they run a campaign which was populist. The way I perceive populism, all right. Now, again, there are many things which could impair the overall program, right? Now, on one side, Trump has this advantage, if you want to call it that he already knows he's not going to run for the next round of elections, so he might be able to take a bit more unpopular type of decision. Again, my my heads up failed me. Yeah, I should really turn off this feature about turning them off after a specific amount of time if I don't touch them. But yeah, I was saying uh, it's kind of like if you've watched House of Cards, right, with Kevin Spacey, there is a point in the series where he says, "I can go with this bill, I can make this, I can try to achieve that because I already know I'm not going to run for another term." So I got the liberty, I got this freedom of not having to tie my actions to my willing of being re-elected into the future. So that could play in Trump favor, right? I got a very defined majority, both at the House and the Congress, as far as I can tell. But it's still the party could get in the way because it is true on one side you're not going to be re-elected, but we need to think about your successor, and we need to be sure that it's going to be on our side. So another Republican in this case, namely probably J.D. Vance, right? So there are also the risk that the policies he's trying to implement, like kind of like Milei is doing in Argentina. And I read Elon Musk reached out to Milei to kind of coordinate some sort of the same type of a cut on government spending Milei did in Argentina with the change of whatnot, right? The problem with that is the public could not be so receptive and not having the patience and wait enough, wait longer enough to see the results of these policies actually being evident in the real world, in the real economy. So that's another risk. And that's why I say timing counts, communication counts. It's all a matter of what the general population would accept, in my view. Like, I was reading a few comments just this morning. I was an American blog, right? And there was these, it was Substack to be fair. Um, I guess it was Adam Taggar's Substack. It was asking a little bit of a pool, right? Are you aware that with all which have been laid out, the way it have been laid out, there could be potential pain ahead? That means that, we might get into a little bit more darkness before finally seeing the sun back once again. And I saw many different people asking, yeah, well, no pain, no gain. Yeah, well, but if you want to change, you need to be able to endure a little bit of pain. So maybe the American people are actually prepared to go through some pain. And that will, again, play in Trump's favor, I guess. But they need to be prepared. They need to be aware of what they voted for and the potential consequences in the short term. Otherwise, the whole thing is not going to work, right? But this is more of a social problem, a human problem, emotional problem, rather than a real economic and political problem, in my view, right? So, yeah, as I was saying, some of them seems to be in contracts with each other. Yeah, okay. Yeah, does the rest of the world not have a say into it? I was mainly referring to tariff, right? You impose tariff on me, and I answer with another protectionist type of a measurement against you, and basically what you got is the deglobalization type of thing, right? And if we have to look at markets, then to me, what was the most important thing for markets was to see a clear winner and not a contested election, and we got a clear winner, and then the market responds very good. But um, it is also true that at the end of it, every well, historically markets tend to do well after the elections, and then you might have a little bit of a sell-off when you got um, the inauguration of the new president, kind of like these. If we want to have a visual representation of it, right? It doesn't mean that it's gonna be a sell-off. It could be just a period of consolidation, kind of like what we got in what was that 2022 for the S&P, right? So again, just be prepared, even from a market standpoint, right? Um, sure, the real economy is different from pure financial markets, right? So at the end of it, no matter how the media spin it, I don't think Trump is going to inherit an economy which is booming and red hot, as they say. So there will be many challenges ahead. And again, this is one of the ironic things. If you start to think about a potential economic slowdown, it would be great for the election losers because they might be able to say, see that? We told you, you voted for the wrong person. We've been in here for a while now. The economy was good. He came into office and the economy just plummeted, ignoring the fact that if the economy starts to slow down, to turn down in 2, 3, 4, 6 months, most likely it's not Trump's fault, right? Actually, the fault is on who was there before him. What you might say is it might be his fault for the things he did like 5, 6, 7 years ago, maybe, but I guess people don't have such a long-term memory more often than not. So it's gonna be very easy to blame it all on Trump, and it's gonna be the blame guy, the scapegoat, if you want to call it that, right? And a lot of what the markets are pricing in right now are just based on the narrative, it's just based on the expectations, but he's not in office yet, and it won't be until January. And then you're gonna go through the legislation process, and it's not gonna go like the snap of a finger. It takes time to pass bills, especially I guess people are a little bit overlooking the Freedom Caucus, which is an is a segment, is a part of the Republicans, which is particularly hawkish when it comes down to the deficit, the debt, the government spending, and whatnot, which could go to impair the ability of Trump to implement all these policies, which, no matter what you think, at least at the initial stages, are going to require a bit more of government spending. Although you might say the ultimate goal is to reduce government spending, but when you need to change structural things in the economy, you need to invest. You need to invest. You need to spend money, and most likely, if the government is doing it out of debt. So you know. And since I'm very optimistic, as you very well know, there's always this risk I see on humanity. I'm always bearish humanity, and so far it never let me down. So politicians tend to be one thing when they run, and to be completely different when they step into office. So that's another potential risk, if not the biggest, maybe. So again, just many things going around. I guess I would like I would appreciate a feedback with the ultimate paragraph here, because that was a nice parallel. I think it was a nice comparison, right? Like this presidency could be like an earning report which actually disappoints expectations, and then you see the stock plunging because expectations weren't met. So the only different thing is now we are not talking about a stock, we are talking about a real economy. We are talking about a society, or at least a huge part of that society, which voted for one path, for one person, from a few changes here and there, right? So there could be a problem with trust, maybe, right? So when it comes down to financial markets and investments, always be aware that no matter the narrative you pick and the flavor of this month, when it comes down to the logics and the justifications, risk management is always key. So be careful out there. If there's one thing for sure, at least that I would deem to be for sure in the coming months, it's volatility. We might end up with the markets going massively higher, but I don't absolutely discard massive and sharp pullbacks in the process. So just be aware, because I guess one of the worst thing that can happen to a trader or an investor is being right on overall direction and then being completely crashed by volatility in the process, and then seeing the market actually going where he was expecting it to go. So again, 1 hour mark. Really got really gotta go now. So yeah, hope you found a little bit of value in these kind of analysis about what this presidency might mean, and that you might at least take a little bit of inspiration in starting to ask questions, right? Because remember that you're not gonna get answers if you don't start asking questions, right? And with that, I wish you all a good rest of your Sunday or of your weekend, and a good start of the week to come. As usual, be nice and be cool. Niels out.